Good afternoon, traders, and welcome to this week's weekly market analysis, Monday the 18th of December. Before we do get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's come in terms of major data. We are, of course, approaching Christmas. The markets, the last week was possibly the last week of high volatility. We had FOMC, we had central banks announcing interest rate decisions, and so forth. So this week it's starting to tame down. Obviously, this weekend coming is pretty much the weekend of Christmas Eve and Christmas on Monday. So the market's going to like a quieter phase. There's a lot less volume that goes through the market. It's also a great time to reflect on what's been happening, reflect on your trading, and for any beginners, you can still participate. The market movements will still be the same, but just in much smaller volumes. So if you're a beginner and you're trading on small volumes anyway, it really won't affect you. It's only if you're trying to place trades of 20, 30 lots at a time that you may feel some difference throughout the holiday season. Okay, so even though it is on what we call lower volumes or lower alert, it's still a very massive market. Okay, so let's have a look at what's happening this week, and I'll highlight the ones that are possibly, what I'm showing you on my screen are the highest impacting news events for the week. But in terms of even within those, we can Japanese Bank of Japan is giving a monetary policy statement. Japanese bank has been notorious for shocking the market with massive amounts of oversupply of print of dollars or quantitative easing programs or aggressive programs, as we could call it. They have been fairly quiet for Japan standards in recent times, but nevertheless their policy statement is due out on Thursday. They never tell you what time specifically. It's tentative, and when it comes out, if it's something that catches the market by surprise, you'll definitely see the Japanese yen move. Okay, so if it's all as per what's been happening in recent times, well, then it will be possibly not much movement at all, but please look out for that. That happens on Thursday. From Canada, we have retail sales. This could impact the Canadian dollar. That's on Friday. These are the next biggest moving events. And also on Friday, we have from the US, we have unemployment claims and final GDP numbers for the year. These are perhaps the highest impacting. Locally from Australia, we have the monetary policy meetings tomorrow at 11:30. There's really not other major news to take note of, but please just be aware of them. In terms of the currency that's possibly going to be affected the most by these news, taking the Japanese yen out of it will possibly be the US Cad. Okay, so there you have it. These times that I'm showing you guys is in my local time, which is my Australian Eastern Standard Daylight Savings Time. I'm located in Sydney, so Eastern time, as I've already mentioned. All right, before I move forward and analyze the markets, today's I just want to let you know that today is the last class for 2017. I'd like to wish everyone season's greetings. Hope you all have a safe and happy holiday. Classes will resume on Monday the 8th of January. That includes a daily call as well. I already did this morning's daily call, and I did mention this there as well, but I just thought I would just remind everyone if you're not aware of it. So today's class, I will analyze the markets. I've just gone through the news impacting events, but let's analyze the markets and let's talk a little bit about reflection, trading plans, and sort of what we can do over this quieter time to sharpen up our trading skills. Okay, so let me bring my charts forward. And let's kick it off with the Aussie dollar. Okay, so typically we can, when I look at this chart, it is very clear that it seems to be in a trend. The only thing that concerns me right now is that if we're in a trend, you got to imagine like if you're going down a staircase, if it's a downtrend. So for example, each top is a step, okay, where you step down, but notice now this top is actually higher than this particular one over here. So generally it's the first indicator of a trend break. Okay, does everybody understand what I'm saying? So I would have liked to seen this top happen down here so that I could continue and continue just like a stairs. Okay, that's typically what I'm looking for. And if I was looking for it in the other direction when the trend is going up, it's exactly the same thing, but look at the bottoms. Okay, and I just want the bottoms to continuously and progressively get higher. Okay, and that tells me that the trend is still intact and strong. As soon as the bottoms start to get lower, then you're starting to think, well, is that a reversal or is it still continuing? So the question arises now that this level is higher than this level. For those of you who have been with me a little bit longer, you will know that, let me zoom in, when I trade, I prefer the trading zone to narrow in on itself. So in other words, say for example, if the market's going in like this and it's getting narrower on itself, creating like a triangle, a converging triangle effect. A narrowing zone is the types of zones that I prefer to trade. They have a higher probability in predicting, or say, let's not say the word predicting, in finding trades with higher probability of doing what we expect them to do. Okay, now the current scenario with this chart right now is that this was the last low, and say this was the last significant high. We've gone lower than that and we've gone higher than that. So instead of our trading range narrowing, what's actually happening is, or has happened, our trading range has expanded. Okay, in other words, the triangle effect is going wider. Okay, like this. Whenever I have an expanding trading range, and I haven't talked about this for a long time, it's the first indicator that I basically will not trade that chart. Okay, does everybody understand? Because when it's expanding, the market is more confused. It's going in both directions. It doesn't appear to have trend, and you can clearly see that now it looks like we possibly could be trend reversing. So I need to wait for that trading range to start to come back tighter. Now, if, for example, the market was to do this, and then over here another low, and then start to go in that direction, well, now all of a sudden you can see the bottoms, and we're starting to get narrowing or channels, and therefore I start to become interested in that particular chart again. All right, so but as it stands right now, Aussie dollar, we have just created an expanding type scenario, so therefore I'm not interested in any trade right now on the on the Aussie US dollar. Does that make sense for everybody? If you're newer in the class, the more interaction you give me, the easier it is for me, the more fun it is for me, and usually something different that I didn't think of pops out of my mind. Great. Okay, so Aussie US, let's leave it alone. Let's have a look at the Euro US. Okay, here's an example of a channel that we've been tracking. Very, very clear for everybody to see. By the way, I'm on a daily timescale, so we can see that we've come and we're inside that channel. I was hoping that this went to this direction to allow this type of trade to happen, but it doesn't look like it, so I'm still somewhere in the middle. The only places where I'm willing to take a trade with this particular pattern is either here, in that direction like that, or up here in this direction as such. So since we're in the middle, there's kind of nothing that I can do. I just have to wait for it to reach one of those extremities. Now, I will point out that just when it reaches there is not enough for me just to take the trade. I will still want some type of confirmation, and in the way that I get my confirmation is in the way of price action reversal patterns. So in other words, what I'm looking for when the market comes down here, I would like to see a candle formation that's something like this, a little inside candle, so it comes all the way there, produces these two candles, and then on the next candle, as we break the top, then I am happy to take the trade in that direction. Okay, so same scenario if it was above, so I would be looking for an inside candle, an engulfing candle, a hanging man, a shooting star, one of those types of patterns. If what I just said sounds to you like I just spoke to you in a different language, what I suggest is go into the CFC Traders website, click on my courses, and look at the price actions videos. They're quite in depth. It will go into exact details, and then what you can do if you don't understand, just email me about a current chart, anything like that, and I'm more than happy to help you. Okay, so Euro USD, right now we're in no man's land, so no trade again, nothing. Let's move along. I'd like to get something off today, but the markets are okay. Here we go. This is the type of scenario. Now let me show you that bottom line. That bottom line is as good as they get. One touch, two touches, three touches, very close over here. So that bottom support line looks really healthy, looks quite strong. So I have to respect it. I'm zooming in now, and all I did was just draw the top line because I got two good levels up the top. So what we were trying to do is we were trying to pick off a trade from the top to the bottom. We never got the setup. We are getting to the bottom now. So what I'm going to look for again is I'm going to look for this type scenario, the little inside candle, and I want to try and take the trade in that direction. Because this support level is so strong, and it basically means that there's a lot of traders out there that have spotted it. There is a good chance also to take the breakout trade. So the way that the breakout trade could work is, let's say for example we got a candle that ended up looking like this. It would be red, okay, and it had virtually no wicks, clearly breaks the line. At the open of the next candle right there, you can take that trade in that direction, and it should have a lot of break-in momentum as long as it looks like that. Okay, because what can happen sometimes is the market will shoot straight through here. Okay, and what you might get is a candle that looks like this, and it's got the long tail, and the long tail basically means it did go down, it triggered a whole bunch of stops, and then just rebound back and closed up the top. Okay, so we're not interested in that candle. If you're going to take a break-in trade, it has to be a candle that looks like this, and it has to be red, of course, and then at the open you would take the trade. So this candle is a possibility, okay, or alternatively look for the little inside candle, as I said, to go back up in that direction. Okay, any questions on that? All good. This pattern is forming quite strong, so it should be attracting a lot of traders to it. So I usually like patterns that are like that. Okay, gold. Gold, I've got the line there. Basically, we've broke through that line quite nicely. We are coming back up. What I might be interested in, the first thing that I have to note is that my moving averages have crossed over, which is generally the first sign of a trend change. Okay, so obviously a trend in this direction. The second thing is we've taken out significant lows, okay, which is done. So now what we could expect is if we produce something here, and if that happens very close to this blue line, like if we get a good price action set up right there where I've got the little circle, then this type of trade becomes very high probability type of trade. All right. Now, bear in mind, this is gold. If you're not familiar with trading gold or you've never traded gold before, what I suggest is log into a demo account and take a couple of gold demo trades just so that you understand the sizing, so that you don't get confused and you don't get any nasty surprises, because you might accidentally trade a trade that's much bigger than what you thought. It's not the same as currencies, okay? So just familiarize yourself with it first. If you're comfortable, once you're comfortable with understanding how it works and all those types of elements, well then of course you're ready to go, and if you like a trade, you can go for it in live mode. Okay, now as it currently stands, let me zoom in. I just want to check the low of the current candle. 1252.74.9, 1252.79. Okay, so the current candle has made a lower low than this one. Okay, so that means we can't, in theory, get an inside candle situation from these two, because this one is already lower. So what that means is, what we can hope for is, let me draw in the correct colors so that everybody can understand it a little bit better. What I would like is for this candle to push forward, maybe give me a little thing, get towards that blue line, and then the candle that follows it immediately, it would be nice if it looked like this in red, and then on the following day we could, at the break of that candle, take a trade in this direction. Okay, so, and notice that all that would be occurring very close to that line which I've previously drawn. It was previous support. Okay, it's broken through, and now could it possibly become resistance? Okay, so there you have it. Somebody's asking me about the moving average periods. Give me 1 second, I always forget. It is a 24 and a 12, and I believe they're both exponentials. Yes, they are. Okay, it's so the blue one is a 12 and the black one is a 24. Okay, there you have it. Okay, Farah's asking me a question. Why would I take the trade? The reason that I would take this particular trade is, let me zoom back out again so that I can. Essentially, the market has come down, and this blue line, we have already observed that the market has resisted. Okay, so has acted as support. The market's come and pushed away, but the selling pressure has been so great that eventually it's come back to test it a third time, but this time it's gone right through. Now, what happens when it goes right through? It basically, if you can think of it, on this side of the line, there's a lot of people that want to buy, okay? And every time we got down here, they start to buy and they push the price back up. It comes back down, they start to buy and they push the price back up. Eventually, it comes back down again, and now there are more sellers in the market, okay? So there are more people selling than I want to buy in, so the price breaks through. Eventually, it pushes back up, but now it appears that there could be more sellers in the market, so the same level that was once support now becomes like resistance, and it could push in this way. Now, of course, nothing is 100%, and we never know that, but this is the theory, okay? This is the psychology, and these are the reasons behind it. It might be a little bit difficult for you to grasp at this point in time, but just understand that this type of trade has an extreme high probability if you catch it at the correct spot. Okay, so essentially, if we catch it right in that area there, it's basically just a shift in momentum, whereas before there was more buyers in the market, now it appears that there's more sellers in the market. Okay, so simple supply and demand. All my price action studies are centered around supply and demand. the shapes of the candles basically represent supply and demand. So I urge everyone to go in and just watch some of those price action videos just to get reacquainted. Even if you've watched them before, you'll probably take something else from it, and the 10th time that you watch it, you'll get something else from it until eventually you'll feel very, very comfortable with it all. Okay. All right. So my gold analysis is I'm looking for a price reversal, price action reversal at that point. All right, let me move along. So look at the US yen, keeping in mind that the Japanese Bank of Japan has a monetary policy announcement to make this week, so they could shift the market along. All right, so looking at my chart, this level is still holding, okay, is still holding. This time we didn't quite get up to it. We were hoping to get there to try this trade, but we fell short. So now let me have a quick look. Give me 1 second. Let me see if I can draw some other things on my chart and make this. This is the first thing that I want to draw. Okay, I can't fit it in, so I'm not happy with it. Okay, this is what I'm feeling, okay? I'm feeling that this market is going to do this and is going to do something like this, okay? That's what it feels like, but it's not enough to trade on. So what I need to wait is I need to wait for this to come to some level, and I don't even know where the level is going to be, because what could happen is this, if that actually went lower, then what I have to do is I have to grab this line and move it to suit. Okay, so at this point I don't know where it's going to be, but what I'm going to do is and if you're just starting out, always draw lines on your charts and leave them on your chart. By me leaving this line on my chart, what I'm actually doing is the next time I come in and I log in, if the markets come down to this level, it instantly tells me that I was thinking that it may do this, and that's why I left my line there. Okay, and it's also good practice to line drawing and trying to find where the support and predicting where the support and the resistance levels may be. At the moment, there is no trade whatsoever on this. We're in no man's land, but I just get the feeling that we may come into this narrowing triangle. So I'm going to leave the line there, because that is going to remind my brain the next time I log in that that's exactly what I was looking for. Okay. All right. So US yen, nothing. Let's move along. Let's have a look at the euro yen. Whoa, euro yen. Let me just get rid of it. Change the colors. I'll just draw two lines. Okay. Now this is what I call a tight market. Very tight. You can clearly see, even if I zoom in, we can see that the market is trading in a tight area. Every time we get to the top line, the sellers come in, push it down. Every time we get to the bottom line, the buyers come in and push it up. This type of market is typically a great type of market to use ranging type of trading strategies, where we're trying to pick off trades this direction, we're trying to pick off trades this direction and this direction, okay, and we just keep doing it until eventually it fails and goes through, or fails and goes through in the other direction. So we're going to continue with the flow here. The next available time that you can attempt this trade is over here. Okay, it looks like it may come here, and when we get to this level, you still need to wait and see that you get your price action, your inside candle or your engulfing candle, just so that you can get the setup that you're looking for. Okay, question template that I'm using, it's just a basic template that I use all the time for the weekly class. All I've got on it, to be honest, is just the two moving averages, which is the 20, 4 and the, what did I say, the 12. Okay, so that's it. I don't even use this indicator down here. In fact, I can just get rid of it. It's pretty easy. Let me finish the class and I'll just show everybody how to build it, because it's a question that's been asked before. It'll take me 2 seconds, but just let me finish my analysis and I'll show you how to build it. You can go back and watch this recording. I am recording, and you can do it for yourself, or you can do it live as we go along. Okay, so my Euro Yen, let's wait till we hit the perimeters. Let's see if we can get another bounce off the channels. Okay, let's move along. Let's have a look at the Kiwi dollar. Okay, Kiwi dollar, I can see that by the fact that I've left this grayed out zone, I was feeling that we were in a tight range and I wanted to get out of the range. We have come out, so let's have a look now. Let me get rid of this now so that it might change the way that I analyze my chart. Okay, Kiwi looks like it may be going into an uptrend. We have taken that out, the highs. The lows started to get higher. So the natural trade that we could look for is look for it to dip. When it dips, try and find your price action over there and then hit your trade for continuation into what may be a new trend. Okay, now if the dip happens to be too low, if it dips too low, like lower than this, well then just stay away and just wait until we get clearer indication of which direction or what's actually taking place. Okay, but at the moment, let's see how far it dips in, and we might be able to get a trend, a new trend type trade emerging. All right, that's my Kiwi dollar. Let me have a look at oil, WTI. Okay, oil, we are still congested up the top here. So oil tends to have that type of behavior around the holiday season, especially the demand. A lot of people going on holidays, the demand for oil can be higher. People use their vehicles more, things of that nature, and it can have this sort of, I guess, consolidating or topping out type scenario. It's one of those things that happens with oil, so just note it in the back of your head for future reference. At the moment, I can't really trade that pattern. I would like to trade it only when I leave the gray area, so either in this direction or in that direction. Until that happens, I'm not prepared to take it. So let me just see what happens, and we will suss it out. Someone's telling me it could be a possible wedge. It could be. If I zoom in, let me zoom in. It's more. Let me get my lines. So we're going in here. It feels like it could be a convergent triangle, okay, of this nature as such. If I wanted to trade that, I really would have to drop down to a 4-hour time zone. On a 4-hour time zone, that looks like a really nice pattern. It's very definitive. It actually looks really, really nice. So let me go back, and what I've just said, if the market can take me to that level there, I'm actually happy to trade it in this direction, provided that I get the setup that I'm looking for. Okay, in other words, I'm looking for that engulfing, that price action reversal candle formation. Okay, so yeah, thank you for that, Paul. I just didn't think it would look this nice on a 4-hour chart. It looks really, really nice actually. Sometimes on a daily candle, you think it's going to look good on a 4-hour, but it doesn't. But this actually looks like a really solid pattern. I like it a lot. I'm willing to trade that one. So that's my my views on oil. Let's wait. Let's see if it hits this top line, and then let's look at a shorting possibility. Okay. All right, the last one for 2017, Aussie 200. Whoa. Okay, this doesn't look pretty at all. Very noisy, isn't it? Let me get rid of this. Let me just zoom out a bit further. I just want to get we're at an all-time high. Okay, so whenever you zoom out of a chart, you can usually see more, but I can see this level here. We're at the same level. So the market has a memory. We're at an all-time high. Okay, so what naturally happens is it can usually bring in extra sellers into the market, the ones that want to drive the price back down. So sometimes before we actually are able to break through that level, before there are more buyers than sellers at that particular point in time, the sellers will dominate, can dominate, and you usually get that effect which we're seeing. So let me zoom back in, and you can see that the market reaches there and it gets shot back really quickly. Okay, so it's there again. I don't usually like trading those scenarios, so this one, let's just leave it alone and let's just see how it plays out. Okay. All right, so that wraps up. Somebody's asked me, can I have a look at the Aussie Cad? I can. Give me one moment. Let me bring it up. Where's my Aussie Cad? Aussie Cad was the chart of the day today. The chart of the day was the Aussie Cad, and the chart looked like this. I still got it fresh in my head. Okay, so it's a falling wedge, and on top of that, let me zoom in. These two candles, it's an inside candle. Even though they're the same color, the second one is completely inside the first one. So the way that you trade this is you put a pending order to sell at the break of the low of candle number 2. That's candle number 2, and this is candle number 1. And should this candle come down and break it, well, then you're trading in the downward direction. However, if this candle breaks the high there, which it has not happened yet, okay, but if it does, then you've got to go back and cancel this order out, and the trade is void. Nothing happens. Basically, we just don't enter into the trade. We cancel it and we look for another one. So let's see if that one plays out or not. So that's my analysis of the Aussie Cad. Okay, guys, I've wrapped up. If you have questions, please type them in. I said I was going to show you how to set up my template. Let me show you right now. So I'll start with a fresh, clean chart. Let me just get rid of this. Let me put this one back to what it was. Okay, so let's say I start with a fresh chart here. That's a brand new chart. On my program, it comes up as white automatically. Okay, I'll just show you how to change the view a little bit. If you right click inside the chart, go to properties, this window comes up. Now the background color that I use a custom one. Whether you like it or not, I'm not sure. The number's 149, I think 149. Yes. So just type in 149 all there, click OK, and then click OK. It changes that. Right click again. See, it's got grid. I like to get rid of it. There it goes. Right click again, go to properties. Let me show you the rest of this. My foreground, black, bar down. I make mine red. Oops, sorry, no, wrong one. Let me just go back to, sorry, where it says bull candle. Let's make it green or blue, whichever you like. Let's go with the green. Which is the best? I don't know which is the best green. Green. And the bear one, make it red. Okay, and the foreground, I think I like it white. Yes, that's it. And that's it. Now if I zoom in, there's my chart. Then if you click on this little plus sign, then go to trend. If I'm going too fast, don't worry, it's recorded. You'll be able to pause it. Go to moving averages. And I'm using a 12. So period 12, change that. Change this to exponential. Do whatever color you like. Click OK, and there you have it. There's a red line. Do it again. Moving average. This time 24. Change it to a different color so you don't get confused. I'll go black. Click OK. There's my two lines. Now I'm on a daily chart, so there we have it. And you want a fractal. Click on there, go to custom, and go to Bill Williams, and then go to fractals. With this one, you just got to choose the color. I just make it white, and that gives the little triangles. Okay, and that's it. That's all I have. And then once you've done it, so that you don't go through this process every single time, choose the colors obviously that you like, but once you're done, right click, go to templates, click on save template, give it a name. I'm just going to call this one test. Okay, and then the next time, let me close that chart. The next time you open a chart, say I'll open a chart right now, comes up Y, all you got to do is right click on the chart, go to templates, and then choose test. Where is it? Test. Where's my test? There it is. Oops. Test. There it is. Click it, and it changes automatically to the way I just saved it. Okay. So there you have it. Look, over this period, guys, take some time to look at your trades. In particular, take some time to look at your trading plan. Okay. Reanalyze whether the strategy that you're using is suiting your lifestyle, particularly the time frame. Okay, do you need to trade more often, less often? Look at how you feel towards every time, your anxiety levels on trading, and just try and think about every time that you've been trading and you were indecisive or didn't know really what to do. Okay, and what should be happening is when you have indecision, you should be able to look at your trading plan, and your trading plan should basically give you the answers to your indecision. So for example, what I mean is, let's just say that I'm in a trade right now and something was to happen and the market goes extremely volatile. I'm feeling like, what do I do? Do I close my trade? Do I continue on? What do I do? As an example, well, this is the time that I should look at my trading plan, and my trading plan should have a line in there that says, in cases of extreme volatility in the market, when I have an open position, do X, Y, Z. And it could be do nothing, close the trade, move your stop. It could be a number of things. And so in essence, what I'm trying to say is you should think about those things before they actually occur, so that when they occur, you're not making a hot decision in fear. You've made your decision under cool, calm conditions without any exposure to the market. It's been well thought out, which is much, much different to reacting to circumstances, as opposed to being prepared first, and then when it happens, just pushing out your plan. Okay, so think about those things. Think about your goals, what you've achieved. If you want to have a chat about your trading, feel free to share anything with me. Just email me, like if you want to email me your trade history, anything you want to share with me, I will always make a comment on it. I'm a trader just like you, so I do this process myself. Over the holidays, I review everything that I do. I look at the performance that I've done, and that's basically how I reset. We will start a new trading challenge in the new year. I don't know the exact dates yet, but as soon as things settle down and the markets get heated up again, we will go again. It's an opportunity for you to trade live with me and basically test your psychology levels, your fear factors, all those types of things, and an opportunity to try and get onto the right track. Okay, as I've already mentioned, this is the last class for 2017. The daily call has also been the last recording today. We'll resume everything as of the 8th of January. I sincerely hope you've all enjoyed this year. Hopefully you've achieved what you wanted to get out of it. I hope you'll have a fantastic short break. It's never long enough, unfortunately. Spend time with your families. Take care, enjoy the holidays, and like I said, review what you've done, reset your goals, recalibrate, as they say, and then hopefully 2018 will be a bigger, better, and stronger year for everyone. All right, guys, if you, during the holiday period, if you want to share anything with me, feel free to email me. I won't respond straight away. I'm on holidays as well, but I will respond, okay? But if you're, 2 o'clock in the morning and you felt like you wanted to write something, feel free to share it. I will respond. It just may take me a little bit longer until I'm back full on deck. Other than that, hope you all had a great year. Have a Merry Christmas and all the best wishes for the new year. Take care, guys, and I look forward to working with you in 2018. Bye for now.